So let's get to the program. Stock of the day is a company that's out with a bit of news today. Costa Group. So it's holding its AGM, speaking of, that was a segue I was going to make, flagging that the continued short-term challenges arising from COVID restrictions. And I thought this was interesting, labor shortages, adding that the issues will likely remain until at least next year. So the investors today, at least, really shrugging off any of the positive commentary around China and Morocco in particular. With the company tipping that the first half is expected to be marginally ahead of the previous period. So guys, shall we get into it? I'll start with you perhaps. Rob, Costa Group. I mean, I think that the labor constraints really goes to case in point. I mean, if you think the borders open in 2022 and we're talking about these permanent changes from COVID, how does migration fit into your view when you're looking at the investment universe?
I think everything's going to normalise relatively quickly. The world wants to normalise. People want to travel. People, tourists want to come to Australia. So, if everyone's vaccinated and there's already a number of countries which are showing what's probably going to happen, and they will have a large amount of data, I think that everything normalises sooner than most people expect. Which means tourists means that the backpackers come and start picking all the berries, etc. I think it normalises as fast as everyone expects. That doesn't fix a lot of Costa's problems,
So
medium to long term.
What are Costa's problems, medium to long term, then, in your view?
They are attempting to go into the high margin categories, which makes sense. The mushrooms, the berries, etc. But these are still cyclical businesses, and I think that over the next 10 years, which is going to see much of what's happened over the last 5 or 10 years, which is cycle, raise capital, dilute shareholding, cycle, raise capital, dilute shareholding.
Because it's such a cyclical business at its core.
And they're correct. They're attempting to reduce that cyclicality by operations in Morocco and Africa, etc. But it can't fix droughts and floods and all those sort of things.
Okay. So this is not a buy from you today.
Look, if they eventually get to a point where they have reduced cyclicality enough, their debt loads have been too high for us for a cyclical business in the past. If they get down to low debts, reduced cyclicality due to their international operations, we may be interested because they are going for the high margin fruit and veggies, which does make sense. So I'm
going to take that as a no today.
No today.
There's work to be done at Costa Group. So what about the upside for Costa? I mean, they could sell into the China market. Some of these problems that they're experiencing right now in terms of labour constraints could be temporary.
Yeah, I think I think Rob's right, they probably will be temporary. For me, the issue with this business is, agricultural assets, there's so many factors that are outside of your control. And last year they had an issue with berries that were crumbling, and it was too low quality to sell in supermarkets. They had fruit fly issues in their citrus. We know the business quite well because we own a company called Vital Harvest, which actually owns the land that these guys farm off, and we get like a look through of what's going on. It's really high quality assets. They're best in breed at farming. Like, they've taken, I think, as much of the risk out as you can through doing irrigation, the way that they plant. Like, we've actually gone and looked at, they reducing pest and all this sort of stuff. But there's only so much you can do, and I think it's just one of these companies that probably shouldn't be listed. I think if you took a really long-term view on it, it's probably a good buy. But today is a great example where I would have sworn that this company was in a sweet spot at the moment, because berry prices are really high. A lot of the competition was taken out over the last couple of years. There's been good rain. There's the conditions in the bush have been strong. But again, like, labour shortages have come up, and it's another step backwards. So it's really hard to kind of predict it year to year. And with so many things out of their control, and pricing is probably the main one, it's an avoid probably for me. And a rule I've always had, it's always tempting to buy companies when they drop like this.
Yeah, because down 21% is a bit tempting.
It's normally the wrong thing to do. That's typically where there's one, there's two.
Don't try to catch a falling knife.
Yep.
All right, so that's Costa Group, the stock of the day.